Good day, everyone. You are welcome to this week's Business and Investment Tips program, a production of RCCG Christ Church Radio with Dr. Ayodeji Ebo, an investment professional. This week focuses on Nigeria's Q3 2024 GDP report. Last week, the National Bureau of Statistics (NBS) published Nigeria's third quarter gross domestic product (GDP) numbers for 2024. The Nigerian economy experienced growth for the 16th consecutive quarter since emerging from a recession in 2020. Real GDP rose by 3.46% year-on-year in Q3 2024, higher than 3.19% year-on-year in Q2 2024, and 2.54% year-on-year in Q3 2023. The improved growth in Q3 2024, July to September 2024, relative to the previous quarter, April to June 2024, can be attributed to the notable contribution from the services sector. GDP is a key indicator of economic performance, measuring the total value of all goods and services produced over a specific period, typically a quarter or a year. Real GDP provides a clearer view of this value as it is adjusted for price changes. Ultimately, it's the increase in the quantity of goods and services produced that matters most, rather than price fluctuations. Nigeria's GDP report captures 19 sectors, but only 5 sectors accounts for 68.5% of the economy's total activities. These are agri 24.1%, manufacturing 13.8%, trade, wholesale and retail 12.2%, ICT 10.9%, and mining and quarrying 7.4%. The non-oil sector, which has been the major driver of Nigeria's GDP growth since Q4 2020, accounted for 94.4% of the GDP in Q3 2024, compared to 94.3% in Q2 2024. The sector grew by 3.4% year-on-year in Q3 2024, up from 2.8% in Q2 2024. There was also a broad-based expansion across the structural sectors of the economy. Services maintained the most robust growth rate at 5.2% year-on-year in Q3 2024, which was the highest in the last 7 quarters. The agriculture sector growth moderated to 1.2% in Q3 2024, relative to 1.4% in Q2 2024, while growth in the industry sector declined to 2.2% in Q3 2024 from 3.5% in the previous quarter. On the other hand, the oil sector sustained its expansion by 5.1% year-on-year in Q3 2024, although this was lower than the 10.2% growth in Q2 2024. The growth recorded in Q3 2024 can be linked more to the statistical base effect, given that Q3 2023 had the lowest oil production of 1.2 million barrels per day in over 4 years. Oil production printed at 1.47 million barrels per day in Q3 2024 from 1.41 million barrels per day in Q2 2024. Based on the contributions of the sectors to GDP, agriculture improved 28.7% in Q3 2024 versus 22.6% in Q2 2024, while the contributions of the services 53.6% in Q3 2024 versus 58.7% in Q2 2024, and industry sectors 17.8% in Q3 2024 versus 18.6% in Q2 2024 moderated. Based on contributing activities by subsector to GDP growth, crop production 26.5%, trade 15.8%, telecoms and information services 13.9%, crude petroleum and natural gas 5.6%, and real estate 5.4% led the pack in Q3 2024. Here are our takeaways. 1. Interestingly, all 19 sectors expanded in Q3 2024. However, 10 out of the 46 subsectors recorded negative growth rates. 2. Despite a 5.2% year-on-year growth in the oil sector, in Q3 2024. Oil production remains low due to insufficient investment and ongoing insecurity in the sector. The oil production at 1.47 million barrels per day is far below the output benchmark of 1.78 million barrels per day in the 2024 FGN approved budget. 3. The agriculture sector growth rate softened to 1.1% year-on-year in Q3 2024 from 1.4% year-on-year in Q2 2024 due to a decline in crop production, 1.2% in Q3 2024 versus 1.7% in Q2 2024. This highlights the lower than expected harvest experienced due to the ongoing insecurity in food producing areas. 4. Growth in the ICT sector improved 5.9% due to higher growth in the telecommunication and information services subsector, which rose to 6.8% year-on-year in Q3 2024 relative to 5.2% in Q2 2024. This can be linked to improved call and data subscribers amid continued challenges in the sector due to FX volatility and regulatory constraints. 5. The financial and insurance sector sustained its strong form to record a 31.9% year-on-year growth in Q3 2024 relative to 30.4% in Q2 2024 based on a higher interest rate environment. The bank's current recapitalization exercise is expected to boost business activities. 6. Growth in the manufacturing sector slowed for the second consecutive quarter to 0.9% in Q3 2024 relative to 1.3% in Q2 2024 because of lower production and contracting consumer demand due to higher inflation rate and borrowing costs. The sector may continue to struggle due to those factors. 7. Trade sector growth softened marginally for the fourth consecutive quarter to 0.65% year-on-year in Q3 2024 compared to 0.7% year-on-year in Q2 2024 due to the continued naira devaluation. This increased the cost of clearing imported items, leading to slower demand. Higher interest rates also impacted the sector. This is expected to linger until FX stability and liquidity are achieved. 8. The depreciation of the naira has significantly impacted the real estate sector, resulting in a notable rise in maintenance and repair costs. This economic challenge has in turn caused real estate growth to decelerate to a modest 0.68% in the third quarter of 2024. GDP growth rate is projected to stay above 3.0% levels in Q4 2024, thanks to the boost from the services sector, as substantial spending on data and voices will continue to support growth in the telecommunications sector, while higher interest rates will boost non-lending growth in the financial sector. The ongoing high inflation rate, the devaluation of the naira, and the expected rise in energy prices for petrol and electricity may continue to affect growth in the non-oil sector. Moreover, rising interest rates will lead to increased financing costs for the manufacturing sector, which could negatively affect companies' profitability. Thank you for listening. Please join us same time next week for another interesting and insightful session. For questions, comments, and feedback, kindly forward to ebo.ayodeji@gmail.com or send SMS to 070-8246-3747. Stay blessed.